Hello and welcome to Capital Call, a special podcast series in which we talk to investors from across India's venture capital ecosystem to understand how they are navigating the COVID-19 crisis. I'm your host Snigdha, and today I'll be talking to Sanjay Mehta, founder of 100X.VC, a seed investments focused fund that works out of Mumbai. Hi Sanjay and welcome to Capital Call. You said on Twitter recently that you've never been more productive than during this lockdown. How come?
Couple of things which has changed in your daily routine, right? You spend a good amount of time, traveling and going to office, setting yourself up, So I think we save another hour or two over there. You typically, being a VC, you are out there in market, trying to discover, solicit deals and stuff, which typically is now not required. So you're no longer attending events or any engagements. So that takes away a large chunk of your, time. The another part is in terms of the team meetings and the preparations, which typically would happen across, or you would have entrepreneurs visiting your office and, setting up. And so the available time has increased multifold. Now, what best to use across is to work across, in terms of getting more out of those time period. And I don't think so this situation will last for ever kind of stuff. This is a temporary situation, so make most out of it. So that's where I have taken a plunge in terms of, rather than using an escape route and being, binging on Netflix, this would be a much better and productive, period, which I don't think so we will ever see again.
So you're obviously working on multiple fronts with the portfolio, but what's taking up most of your time? What's top priority?
Today, in this situation, my maximum time allocation is to my existing portfolio. I've never seen a better opportunity to engage on with your founders. So it's all. So first, priority wise, it goes to all the existing portfolio company founders. The next comes across talking across to VCs. Exchanging notes with them, trying to understand what's happening in their portfolio, how are they navigating, learning from their experiences, sharing notes at my end. So that takes the second one as a priority. The third is the new deals, because that's where you can start looking at opportunities within this sector for the so-called all-weather businesses which can work across.
How do you define all-weather businesses?
All-weather businesses are the businesses which would be able to, get customer, get growth, sustain in every period. These are not seasonal, right? So for example, hospitality business, it's a very seasonal business, and travel, which has taken a hit kind of stuff. So what kind of businesses are all-weather business will be attractive to most of the VCs? Will we be seeing across very similar situations like COVID-19 coming up again? I don't think so, but there's huge amount of fear which is set into VCs or investors. So you talk to anyone, they don't want to put this risk out there when they are investing. So there are specific challenges for most of the VCs in terms of their horizon. To look at now deals which are going to, I would say, mitigate all possible risk and continue, and that being across the businesses which do not have or are limited physical engagement, no high touch. Anything high touch is gone, right? There is no way that VCs are going to look at those businesses in near future, or even like after 12 months. I don't see high touch businesses coming into VCs' favorites.
For example?
So let's say I have got an omni-channel retail outlet to sell across lingeries, right? So, or you go across on an, a large chain luxury restaurant, or anything which would require across for me to physically go out, right? So all the consumer journey has to start at home. First, mobile, right? So anything which goes on mobile, any business which are online enablers, so there are going to be specific attractive sectors.
Okay, taking those factors into account, let's look at the 100X portfolio. How many of your companies would you say are already all-weather businesses or have the potential to become such businesses?
So a lot of the companies within our portfolio are getting traction. So for example, we have a company called Nourish, which is helping do online academies. So it helps all the training professionals, media companies who have content where people want to put out training courses or do some training engagement. They can use their software to build a complete online academy. So they are like 20 times growth has happening. We have got a company called F&V Farms, which is into daily supplies. So they have come out with a subscription model working very well. Their demand has gone through the roof. Everybody wants things at home. Cost of customer acquisition is down for them. So those are huge positives for their business. Then we have got a couple of health tech products companies called Renal Healthcare, which is into kidney dialysis chain. So so the unique way what we are working with the founder right now is, while they have a micro dialysis center, they are working in the business. I mean, they are adding customers also because people are unable to travel far and they need services near to their home. So their micro dialysis center model works. We are going step forward. We are talking to founder and working out a model. Can we bring that dialysis at home? Now, if we are able to do that, build the standard operating procedures and work on that new business model, then it's a big upside for those guys, because now in future they would be able to give dialysis at home. So that's going to my idea here is to use this crisis to see how we can bring in new models, new engagement for customers. How do we improve lives of the customers, right? And in turn build a growth business, right? So I mean, various companies have got various business models, and how do you work with each of the founders to find out what are the right ways to go about it, the legit ways, and our very clear thing from the first day at 100X is do not innovate in legal and finance. So outside of it, we work with any of the founders to help them do any innovation and engagement. So you spend time on each company, and this takes a large amount of your time, because now you are actually trying to think like a founder, work like a founder, be it in his shoes. It is less of opportunistic mindset like a VC, but more of a business growth enabling. So you are wearing an entrepreneur's hat rather than a VC hat in terms of how do you create value before valuations.
Could you share some of the things you're doing proactively to help the portfolio? Are there any specific imperatives that you've set down for founders over the next 3 to 6 months?
First and foremost, if I believe none of my portfolio guys would have seen 2000 dot-com bust nor 2008 recession. I've been part of it. So we have seen, I was an entrepreneur in 2000 dot-com bust. So I've seen that whole journey where, how as an entrepreneur, I tide over my tough times, and 2008 when financial recession hit across. So not that I know what is happening right now. It's all unknown. So I'm also fearful. But we know what things can get you survive. So how do you move your levers quickly from a growth mindset to a survival mindset? So that's where we work with each of these founders. First and foremost is to extend runway, right? And this is where I believe that, many of the founders who were in for glamour, would find it tough to navigate these times. And founders who are married to their vision will continue building it. So that's where it says that you'll separate men from boys, kind of. So that's how it would be. So working with these founders in terms of extending their runway, ensuring that while they are doing it, the reputation of the brand, the company is preserved across. You don't, as I mentioned, you don't want to be, or rather, you would be doing it in a right way, right? So, for example, negotiating contracts with your suppliers, the landlords, saying that it's a force majeure situation and government has already declared. How do you renegotiate contracts? Right. So doing it right way, extending the runway, trying to use this time to build and create a product roadmap which is going to help them become an all-weather business. How do you see your cash on hand deployment for next 12 months? So going into detail like we would have never been before. And most of the times founders are very smart. I would say 90% founders are smart. Even 95% are smart. They understand once you start asking questions, right? So it's just that you have to show them the mirror, saying that this is where it is, this is how things will happen. And most of them are receptive. They understand, saying that they can't have a fixed mindset of saying that this is how things have to be done. They can adopt the newer ways and find their way to their destination. So it's more of I would say more of coaching and mentoring, which is happening right now in terms of, because at the end of the day, we are not going to run that business. It's they who are going to run the business. It's only that we can only pinpoint, what are the do's and don'ts which they can do. Like every time I tell most of the founder as an anecdotal, you living in your home, you will never find any mistakes in your home. Get a guest into your home, he will find out 10 things because he sees from a very different stuff. So VCs are like that, right? Once we start looking at your business plan, we can pick out holes much better than what you would be doing it for yourself.
Streamlining costs, extending the cash runway, that's important, of course, but at some point companies will need follow-on capital. Given that 100X is a seed stage investor, how challenging is the follow-on funding environment for you right now?
So it's tough for most of the founders, and it's going to be tough to raise money, and that's where I said across we keep on exchanging notes. Advantage for 100X.VC, because we are a first check writer, our deals or our engagement within the angel space is very high, with family offices very high, and these are the people who are individual, can invest small checks. So that is where a lot of our time goes across in terms of mapping angel investors to our portfolio, helping them raise money. So yes, it's going to be tough. Now, another aspect is because we were the first checks each stage, there was not a lot of expansion which the founders did. Typically, somebody who has raised anywhere, let's say 3 crore to 5 crore, would have, build a large team, start expanding across. Those are the expenses which typically doesn't happen at our end, right? So anybody who is at Series A is more in trouble, where you build 100+ people team. Now you have salaries to pay. The challenges are much different on that side. So more the funding you have raised, more you are ahead of the curve, more bigger the challenges. So because we are first in the line, I think we have a much lesser challenge in terms of, because these are founders who are happy to forego their salaries, happy to put their more skin in the game. They themselves are more or less driving the whole business. These are less than 10 people team, easier to manage. There is enough equity on the cap table to incentivize the employees and give them ESOPs, right? So if you're a structured Series A, to give away ESOPs also require a lot of challenges. So in that sense, we find ourselves into a sweet situation in terms of being able to navigate with these portfolio companies. And this is on the optimistic side. Now, on the pessimistic, or where we believe we would start seeing mortality happening within our portfolio somewhere in September, if things don't change. If there are going to be, I would say, no increase in demand, then we would definitely see some mortality happening. Advantage, I mean, just to share across in this discussion, out of the 20 startups what we funded in December 2019, 11 could manage to raise some money. So in that sense, they are far more runway than most of it. So I think it's not that the rest 9 are in trouble or this 11 are safe, but they have got some runway at their hand.
We're seeing some deals happen, but clearly there is a slowdown compared to even a couple of months ago. Also, what's the impact on valuations in this environment?
If we were seeing across, let's say, 10 deals announcements happening across every month, we might end up seeing 4 or 5. So 50% possibly, I would say, across, it would be a slowdown. So deals would get funded, follow-on rounds would happen across. People want to invest in great startups. There's no doubt on that. Anything which is going to be, as I said, across into any sector driven, which are rightly positioned as an online all-weather business, will become a lot more attractive, and those will see more and more rounds happening. The ability of founders even to raise the round at last round valuation, I would see that as a success rather than a failure. We always talked about flat rounds being not good and not happy about. Today, flat rounds are most welcome, right? So even if you are able to raise at the last round, we are happy.
So does all this mean that the next 100X batch is on hold?
We're planning across sometime in June, our class 2. That was our goal as it is. We are reworking. We are again, as we are preaching to our portfolio, we ourselves are trying to reinvent our model, saying that what more can we do across. So we have got multiple thoughts. Can we start looking at a smaller class, kind of, but increase the frequency, or we stay put with the existing portfolio and do a double down over there. So there are various school of thoughts. We have started issuing term sheets. Class 2 is on. We are reviewing deals. It's not going to be saying that we are going to stop. We believe that this is the best time to invest. It's just that we are figuring out our go-to-market model, so that post our investment, we believe we can help the portfolio company in a much better way than what it is now. Because right now, as I mentioned, my bandwidth is purely to my existing portfolio. So in that sense, if we are going to see across, if we start writing checks and we see that the V-shaped recovery is not happening, there is no, I would say, demand coming in, then how do you manage with these portfolio companies, right? What do you do? So we have been closely looking at agri-tech, for example, which we believe is an all-weather business. Logistics, which we believe is an all-weather business that will continue doing. So we are ourselves trying to discover our own preferences and narrow and sharpen our investment theses in the go-to-market. So we are discovering, we are open for business, we are looking.
Well, I'm sure entrepreneurs will be glad to hear that. Thank you, Sanjay, for a great conversation as always. You've been listening to the TechCircle Capital Call podcast. Tune in again next week for another episode and stay safe. Thank you.